Like I mentioned, the banks have really taken the spotlight, but obviously we have seen results from the insurance companies. Let's first of all get your view on insurance valuations right now. We've seen them pretty much the most depressed sector. Do you think it's justified? Are investors' fears really justified at the current levels?
All right. Thank you so much for having me, Wole. Let me start by saying the insurance sector is the only sector year to date to be in a negative territory. As it stands now, the insurance sector is down 26%, and compared to other sectors which have closed in the black year to date. One thing that is uppermost is the lack of disclosure, especially in this sector. We find out that most of these insurance companies have not been coming out with results, as promptly as they should, as it's witnessed in other sectors. But last week we saw a lot of them coming out with 2009 figures. This is 10th month into the year, and a lot of investors have not had the opportunity to see these figures and be able to price it in, and so we have most of them trading at par.
But now we're seeing those figures. Let's start with Custodian and Allied Insurance, which released its Q3 numbers. It's not one of those that released the full years very late, but Q3 numbers are out. Were they in line with your expectations, and how are you rating that stock right now?
Yes, Custodian's Q3 figures were in line with our expectations. We noticed that top line, the gross premium was 6.1 billion, 51% year-on-year growth from what we had the previous year. We expected this strong growth based on the fact that the company has a lot of major deals. Uppermost is a deal with NNPC, is the lead underwriter for the NNPC's risk. And we know that this relationship subsists. So we are not surprised at this figure coming out from Custodian. However, we just noticed that in terms of PAT, there was a bit of a slowdown. Though gross premium grew 51% year-on-year, PAT was just able to grow 18%. And we know that this is due to a lot of factors. One is NICOM's standing rule on provisioning. Insurance companies are expected to provide for premiums that have been outstanding for up to between 90 days and 365 days, providing for up to 25% and 100%. And we know that this probably would have resulted in a dip in the PAT figures. Also, we know that investment income would have pulled back in the third quarter of this year. We know that yields in the bond market have spiked, and this would have resulted in bond prices, falling, which would have led to mark-to-market losses for these insurance companies.
But overall, would you rate Custodian and Allied buy at the current levels?
In terms of peer valuation, we know that Custodian is trading at 6.5 times. We know that it's considerably better than some of these peers in this industry. However, our own reservation is that Custodian is exposed so much to oil and gas risk. Oil and gas business accounts for close to 50%, of his business and income. So we know that crystallization of this risk might just be, might lead to a complete turnaround in the business figures. So we are still optimistic on Custodian, considering other businesses in this sector.
And then let's talk about Guarantee Trust Assurance. Obviously, that has been in the spotlight because of the impending change in ownership. We know Guarantee Trust Bank has already announced that they will be divesting from that company. How are you rating that stock? And of course, let's start with the results. Were they in line with your expectations?
Yes, they were in line broadly. What we've noticed is that some of these insurance companies that are well positioned, the likes of Custodian, Continental, GTA, have continued to grow their books, significantly. They've been able to leverage on a lot of business opportunities which are bound in this market, and they've been able to grow their books. Custodian posted close to 6 billion gross premium, which was a 25% increase year-on-year on the figures.
You mean GTA? You mean
GTA rather. So we note that this, we believe, will still be driven by retail business, as at the end of 2009 full year as well as H1, retail business has accounted for up to it's the major growth in its business line. So we know that this should continue to account for growth in the figures. However, for the divestment plans by the current parent company, GT Bank currently owns up to 68% of GTA. For us, we are not particularly worried about ability of GTA to attract investors. We know that its track record has been good, and we know that this would allow the company to attract good investors. Also, the company came out to say that a lot of some private equity firms are currently talking to them, and also we have some offshore investors who are looking to take position in this business. And
then lastly, if we can talk about Continental Reinsurance very quickly, though, because we're running out of time. We've seen, obviously, it's the top reinsurer in the market. What were your thoughts on the numbers? We continue to see that improvement over the last few quarters?
Yes, for Continental Ray, it has a large balance sheet compared to a lot of these other insurance companies. The gross premium came in at 7.1 billion. It's higher than, like, I think 20% or thereabouts higher than the figure last year. However, for PAT, we noticed that PAT was just slightly below 1 billion rather, 899 million, so to say. And this is actually a reversal of the loss it made in the same period last year. We know that Continental Ray also has potentials for growth. Speaking with management of the company, we know that the company has positioned itself to also take advantage of these business opportunities that are thrown up in the economy, likes of oil and gas business. So we just think that would have impacted the figures of the company.
Okay, unfortunately, it would be nice to have more insight. Unfortunately, we've run out of time. But thank you so much for coming on and sharing your insights on the insurance sector.